Hello, I'm Thomas Taplin, and today we're taking a look at the US housing market, a week after what has been the most positive data to be released on house prices in the country since January 2006. Well, joining me on the line is Trean Group's Vice President, Scott Shellady. Scott, firstly, are we on the verge of seeing a new housing bubble forming in the US?
I think I can say that quite emphatically for the average man. The people that do have, the upper 1%, they're still fighting and spending a lot of money over high-end real estate, high-end art. Those types of things are enjoying a very big increase. So your high-rises that, overlooking a park in New York or L.A. or something of that sort, those things are still very expensive and getting more so. But the average four-bedroom family home in an average American suburb, absolutely not.
Okay, but if we did see a bubble in the near future, though, surely this would cause more problems in the long run for the US economy once the bubble bursts.
Well, I mean, we would have to have these interest rates stay ridiculously low longer than they should do. And I think you've had our Fed come out and say that they're going to start tapering them once they see some growth come into the economy. But honestly, I don't see where the growth's coming from yet. So I don't think we'll see them start to taper these asset purchases or stop putting their money into the market for a while. Some are calling for the Fed to stop pumping our market by the end of this year. I think it won't be till the end of next year. So they would have to leave the rates low and unchanged for a significant amount of time, and we would have to see a ton of inflation peak into the market. And to be quite honest with you, our dollar is strengthening compared to everybody else right now. We've seen a very good period for the dollar over the last 6 months, and it's off today. But I think ultimately, in the face of a stronger dollar, those things are all going to be very difficult. So I think there's money out there amongst the upper 1%, but they're all fighting for the same things, and those things are experiencing a bubble, but they're not also people looking for mortgages either. The average Joe, I think we're in for a long slog. I just don't think we're going to see a market anywhere near that we've seen from 95 to 05.
Just how much of a factor does household wages and family debt play a role when looking at house price data? Wages they all play a little bit of a role. I think that the thing that no one's talked about yet, which is a big elephant in the room, is school debt, our higher education debt here. The government's been funding. I mean, there's been talk that there's a bigger bubble there than we had in the mortgage business a while back. So keep an eye on that. I think that as far as wages go and debt, I really do believe, honestly, that the average man on the street doesn't feel wealthier yet, and they don't feel like they can go out and want to buy a new house just yet. And I still think people are fighting for jobs, not worried about if their house can sell for another 5% more. So those two things play a little bit of a role. But right now, I still think they're happy to have a job, to have the wages, rather than have those two things really play a major role. Looking ahead, Scott, just how much of an impact is this having on the US economy at the moment, if at all?
Well, it's going to have a psychological impact. That's what's going to really lift us out of any problem that we have here in the States. Because we don't have the growth, so we're going to have to rely on the consumer, and the consumer's going to have to start to feel good before he starts getting the pocketbook out. And that's been an issue. That's been an issue up until, well, it's still an issue right now. My gut instinct is this: we're going to need to see that jobs rate run 6% before we really start to see a big pickup. And I don't know how long that's going to take, to be honest with you. I want my house to go up in value just like everybody else does. But I think if you ask the average guy, I think they're happy with any percentage value, and they're also happy to hang on to it because they've got a job. I'm not trying to be overly bearish or too negative. I just am trying to be realistic. And you can pick up still pretty decent prices in the Midwest. I think you can in a lot of other places in the country. And I don't want to talk too negative, but I think we got a long road ahead of us. I really do.
Okay, that's all we've got time for. Thanks for joining me today, Scott. I'll be back tomorrow with the press review, but until then, goodbye.